There are several exemptions or exclusions from capital gains tax. Not all transfers attract capital gains tax. There are some exemptions and exclusions as guided by the 8th schedule and the 1st schedule of the Income Tax Act. To list a number of them, there is an exemption of property being transferred by an individual where the transfer value is not more than 3 million shillings. And this is spelled out in the 1st schedule, paragraph 36DI. Another exemption is income that is taxed elsewhere, such as business income, income from life insurance business, income of corporate societies. For instance, for business income, if one is a property dealer and he is buying and selling property, in this case transferring them to the buyers, then it means he will declare such income as business income and therefore will not attract capital gains tax. Transfer of private residence, if the individual owner has occupied the residence continuously for 3 years period immediately prior to the transfer concerned, then it means such a transaction will not attract capital gains tax so long as the taxpayer is able to provide evidence that he has been occupying that residence for more than 3 years. An agricultural land having an area of less than 50 acres where such property is situated outside a municipality, gazetted township, or an area that is declared by the minister by notice in the Gazette notice to be an urban area for the purposes of this Act. Other exemptions include transfer of assets between spouses, and here spouses mean husband and wife, and the transfer can be either of them transferring to the other party, that is the husband transferring to the wife or the wife transferring to the husband, though the latter is not common. Transfer of assets to immediate family, and here immediate family means one's own children and not cousins or other children. Transfer of assets between former spouses as part of a divorce settlement or a bona fide separation agreement. This implies that if spouses divorce and in their divorce settlement they agree that they will transfer properties to either of them, then such transactions will not attract capital gains tax. Or transfer of assets to immediate family as part of divorce or bona fide separation agreement. It means that children of the divorced partners, then they can benefit from the transfer of the property, and such transaction or such transfer to such children will not attract capital gains tax. Transfer of assets to a company where spouses or a spouse and immediate family hold 100% shareholding. If such a transaction occurs, or if such a company sells a property whereby there is 100% holding of the spouse and the immediate family, or only spouses, then it will not attract capital gains tax. Property which is transferred or sold for purposes of administering the estate of a deceased person. In case a property is transferred for purposes of administering an estate of one who has died or a deceased person, then such kind of a transfer will not attract capital gains tax as long as evidence of such is given. Vesting in the liquidator by a court order on the property of a company. In case a company is put under liquidation and the property they own is transferred to a liquidator, such transfer does not attract capital gains tax. Transfer of machinery classified in paragraph 7 of the second schedule does not also attract capital gains tax. Or transfer of property for purposes of only securing a debt or a loan. That is, in case you walk to the bank and you want a loan and you give your property or your title as a collateral or as a security to the collateral, then such property or such transfer will not attract capital gains tax. And at the end of completing the loan on discharge, such property, when it is discharged back to you, then it will not attract capital gains tax. There are penalties for late payment of capital gains tax. Through the Finance Act 2018, all penalties for late payment of taxes were harmonized to 5%. That introduced a section in the Tax Procedures Act, that is section 83A, whereby a taxpayer who pays his taxes late is penalized at the rate of 5% and 1% interest monthly of the tax due. The relationship of stamp duty and capital gains tax is that capital gains tax is paid by the transferor. The transferor in this case is the seller. And stamp duty is declared and paid by the buyer, who is called the transferee according to the Stamp Duty Act. The stamp duty is normally determined by the Ministry of Lands after doing evaluation, but KRA was appointed by the Ministry of Lands through the Stamp Duty Act to be the collector of stamp duty. Therefore, we administer the collection of the stamp duty, but we do not determine the value of the stamp duty. However, the rates for stamp duty are 2% for freehold property, and for leasehold property it is 4%.